So George and Michelle, as he mentioned, have a booth set up out in the general lobby area, and I'm sure you'd be happy to field any other questions you have as the day progresses. I would now, in the same thread of talking about cryptocurrencies, like to invite Amber to come up. We'll be moderating a panel discussion in dealers in digital currency, becoming MSBs.
Perfect. So I'm going to invite our panelists for this panel to come up to the stage. So I know that we have one panelist who's running a little bit late, and so she's just going to come up and join us. She's on her way here right now. And I'm going to do something a little bit different. So rather than introducing these brilliant folks and giving you a rundown of the things that they've done in their backgrounds, I always have a question that I like to ask people when it comes to cryptocurrency and blockchain. So I'd like you to do an introduction, and with telling us who you are and what your company is, tell me how you first became interested in Bitcoin and cryptocurrency and blockchain, and what keeps you here in this crazy world?
I guess I'll go first. Hi, I'm Richa Vajpeyi. I work in marketing for a company called Aion, which is a blockchain protocol, as well as a few other companies in the industry. I heard about blockchain, funnily enough, through Don Tapscott, who wrote a book with his son called The Blockchain Revolution about 4 or 5 years ago now. And it was funny, I actually had him come and speak about the arts. And he was talking about how people can actually buy a Picasso or something that, traditionally we wouldn't be able to buy unless you're filthy, filthy rich. But you could actually buy a piece of the Picasso on the blockchain. And say there are 100 people who bought this one asset on the blockchain. It's almost like a timeshare with this piece of art. And he was talking about technology and art, and it was just so interesting. That's kind of where it piqued my interest as to what this new technology is and what the implications are in just so many different industries and so many different ways in which we interact with the rest of the world, maybe art, supply chain, digital identities, and that's kind of where my interest grew from. I have a background in marketing in several different industries and got the opportunity to work with a company that produced Aion as of last year, so it's been about a year and a half now. And it keeps me wanting to stay in this industry just because of those implications. So, yeah.
Hello. Hi, my name is Jean. I'm a founder of ShakePay, and we're a mobile app that allows Canadians to buy and sell Bitcoin on their phone. And I guess I got interested in Bitcoin. I was walking down the street in 2013 in Montreal. We have this thing called Formula 1 weekend. Saint Laurent gets closed. There's a Bitcoin embassy. I was walking by, and one of the folks, comes by and says, "Hey, Jean, here's a piece of paper. You got some Bitcoin." What's Bitcoin? He explains to me what Bitcoin is. And I just couldn't understand. I was blown away by the fact that you could store money on a piece of paper. And if any of you know what Bitcoin is, it's not actually stored on a piece of paper, it's stored on a blockchain, on this distributed ledger. But I always thought that was so interesting that money could be stored on something that I could control, that was not in control of someone else. When you deposit money in a bank, it's not really your money, it's not stored in the bank. And I thought that was really, really cool. And so I started playing around with it. I started understanding what Bitcoin is and how it's a platform for open innovation. No one can stop you from playing around with the Bitcoin blockchain. You can run a node and start coding applications that run on Bitcoin. And that's what keeps me interested as I progress into ShakePay. We founded ShakePay a couple of years ago. You can download it on the App Store, shakepay.co, and in 10 minutes, any Canadian can buy and sell Bitcoin. You can do so if you
My name is Stephen Brent Seargent. I'm an anti-money-laundering investigator at Bitfinex. I actually got into Bitcoin and blockchain when I was working as a paralegal for a fintech company. I started researching about fintech and listening to a lot of podcasts to get an understanding of what fintech was. And back in 2015, everyone was talking about blockchain and Bitcoin. And I wasn't really much interested in the technology because I'm not very technical, but I did like the sound of being part of a startup and the startup life and moving to San Francisco, that whole idea. So I figured the only way I could get it was asking the podcaster. He told me actually compliance officer was probably one of the only things I could get in with my legal background. So I researched how to become a compliance officer. I got into anti-money laundering at a bank at HSBC, and then I transitioned into AML at Bitfinex. And I stay in this industry because regulation is really just starting in this industry. I don't believe all the companies are doing a great job of compliance, and us included, we're still growing as a compliance and AML program. So I want to be here and see this out, see what the future holds. It's the future of this financial system, and I know that's exactly where AML is going to go.
Thank you. I realized the other day when I was thinking about this question that back in 2013, I never would have asked this question of panelists at the beginning, because there was a point where probably at least one person that you would have had involved in cryptocurrency would have said something about like, well, I was buying things I shouldn't have been, or I was messing around on the dark web. And I found that what you see now in terms of people's journeys into cryptocurrency, into blockchain, is very different. And so we're seeing an interest from this caliber of professionals from all different fields. And with that, I want to jump into, we're going to talk a little bit about digital currency, virtual currency as it's called in our AML legislation. We hear about that, we hear about blockchain. What are these things and what are the differences between them?
So I can take a stab on that, and you guys can jump in, but virtual currencies do not need to be digital currencies. So a virtual currency, and I'm sure everyone here knows, could even be a game giving out tokens that hold some sort of value within the game. They're just not physical in form. That's my understanding. Whereas a digital cryptocurrency, to its name, when it says crypto, is attached to a cryptograph and has the underlying blockchain technology beneath it.
I guess I'm with you on that. I see Bitcoin and other cryptocurrencies, if you want. You have a list of currencies that live exclusively on the internet. So Bitcoin, for example, there's no physical representation to it. And what makes it really interesting is because it lives on the internet, it can be traded 24/7, like George mentioned earlier. 24/7. There's no restrictions. It's really a technical representation of assets. Whereas you have other currencies like the big US dollar or Tether, or other currencies that are pegged stable coins that are representations of non-virtual assets. And these are a bit more complex in the way that they operate and the repercussions. But I guess that's the way that I distinguish between the two, digital currency and virtual assets.
Fair. And then what about the blockchain piece? And so if something's on a blockchain, is it by nature a virtual currency?
I think so. I mean, the differentiators here, I would almost say it like digital currencies are virtual currencies. Not all virtual currencies are digital cryptocurrencies. So the way you describe them is cryptocurrencies are usually on a distributed ledger. Virtual currencies can be centralized. So if I go back to my game example, one game can be giving out these virtual currencies, whereas cryptocurrencies are on this distributed ledger and it's decentralized.
I think that's probably it. I want to add, I'm not very technical. I think George from BitSpark did a good job of explaining as well as the panelists. When I saw the question, what is cryptocurrency, the first thing that came to mind is like a new social media platform. You know, if you really think about it, we don't see people lining up at conferences for Canada Savings Bonds or TSX Index Fund. It's a new currency, but it's also a new way of life. People are actually attracted to different currencies based on their preference and based on the crowd they want to be in and the influence they want to have in the world. So I think with all the technical stuff, we should really think about like the social aspect that cryptocurrency is really bringing, how it's bringing people that are worth millions of dollars, but may dress up like they're going to a rave, and people that are dressed up in full suits, and you don't really know who has a lot of money. That's the thing, nobody's talking about who has the most money. We're talking about what can we do with the different applications and what the future holds for the blockchain.
Which is a perfect segue into what does the future hold and what problems is blockchain solving right now? So what things are there and are working? And what are some projects that are in the works that maybe aren't solving problems yet, but that you see working soon?
I'll start off. I think banking the unbanked is always going to be a huge advantage for the blockchain. I don't know much about this, but I know that projects like Shift Network is working with so many people that don't have access to a financial banking system, or they have to walk miles and miles just to get to some kind of financial intermediary, whereas they all have cell phones, they all have data plans that are connected to the internet, where they can be moving around money. And on the backs of access, a lot of in different countries, women aren't allowed to hold certain financial finances, period, or move money around, and the blockchain is really giving access to those to earn the income and to do projects that they wouldn't necessarily be able to do and get paid for.
I think on a high level, what's really interesting about digital currency is that it drastically reduces the transactional cost for transacting between two parties. And that sort of is the repercussion behind why coin is more valuable than a shell. As a medium of exchange, or even as a store of value. And so as you see, let's call it civilization modernize, the transactional cost, the cost for doing a transaction reduces, and then by increases trade and increases wealth. And I think that's what you're seeing with digital currency, Bitcoin namely being a store of value, and some other currencies being a representation of an asset. The mere fact of it being open and the ability to transact on an open platform, it will just drastically reduce the transactional cost for not only peer-to-peer, one person to another, but cross-border and so on.
Yeah, I agree with all those things. I will say though, the blockchain is just not advanced enough to do the things that we want it to do. So even things like the Shift, there are just so many different implications when you think about any moment when a lot of people need to interact with one ledger or one database, a blockchain is applicable. But the technology is just not there yet right now. So the only implication we see right this minute is exactly like what you said, is when it comes to payments or sending money abroad and allowing access to people who just did not possibly have that access to be able to send money back home without going through two different banks, waiting 48 hours, using their SWIFT code and spending a lot of money to do that transaction. Also, it empowers people to hold on to their own money. So if you think about 2008 and the financial crisis and a bunch of banks that just went belly up and said, sorry, especially those, the private banks down south, where they just said, we're bankrupt and we don't have your money anymore. This allows you to control your own money. So if you have a wallet with ShakePay and you buy a lot of Bitcoin, that's your Bitcoin and it's with you and you control it. A bank's not loaning that out to somebody else and making interest off it, plus charging you to keep your account. You know where it is and it's yours to do whatever you want with it.
I have a follow-up question, if you don't mind. You mentioned that the blockchain is not what it should be, or we're waiting for some improvements. Do you mind walking into that?
Yeah, a lot of the implications we see in terms of digital identities or supply chain on the blockchain, and you just hear about so many of them every time I go to a conference. I'm mind blown by all the different things we can do on the blockchain. Quite honestly, I haven't seen any enterprise actually implement a blockchain. They're all at a proof of concept stage, they're kind of figuring it out, they don't understand exactly what the implications will be on a tangible level today. Also, it takes a while to transact on blockchain, so transactions are just not as fast as they should be. When we're at that point where I can go in and transact for anything immediately, not have to wait for, my cryptocurrency to go into your wallet, will definitely be at a better place. The other thing is, and not to get too technical, but you think of Ethereum, which is another blockchain protocol. There was a company that came up with a game on Ethereum last year called CryptoKitties, and it's literally people buying cats on the blockchain. And the entire network kind of died for a couple of days. Transaction times were insane because of this game that had to do with cats. So we're talking about massive, oh yeah, this whole country is going to be on the blockchain. It's not going to happen tomorrow.
Has anybody played with CryptoKitties? Just show of hands. Okay, does everyone know what Beanie Babies are? You remember the little collectible toys? So this was kind of like Beanie Babies, only digital.
Yeah.
So you have these little digital, silly-looking cats that had different values ascribed to them. And people were trading them and paying ridiculous sums of money for them.
And these cats were really expensive, and they were just online. It was like 10 grand for a cat or something. I don't even know. You can't even pet it. It's online. So, that's the point I'm trying to make. As much as, there are so many companies in this space just doing so much and trying to advance things, there are also companies like Aion that I work for that are trying to look at, okay, these are the issues we have with this industry right now, and how do we actually bring it to the mainstream? How do we actually have people in this room adopting it?
So I'm going to ask a question just based on this that wasn't on our question list, so I apologize for that. But if you're an MSB sitting in this room, and you know that you hear a lot about blockchain technology, you know that you hear a lot about different possibilities, and now we're hearing that things aren't ready, what should the folks in this room be looking for? So what should they be watching for in terms of when should I start looking at the technology again? When are things ready to start looking at adoption from an enterprise perspective?
Definitely start looking at it now. Just because it's not ready doesn't mean it's going to go away. This is an extremely large growing industry. And it comes back to Blockbuster looking at Netflix and saying, this is ridiculous. It's kind of that, and it doesn't need to be, because there are things that your industry and your companies can benefit from the blockchain if you start looking at it now and looking at what are the implications, where are the synergies, what can I do today, and what does this mean for my business tomorrow, which I'm sure most businesses, I hope, are doing. I don't know.
I agree with that. I think they should have already been looking at blockchain, and even if it's not ready right now, I think it's a good time to explore it, and you might be able to create something that's more suited for your actual business instead of someone giving you a cookie cutter solution that they're trying to sell. You might be able to work with a blockchain company and create something that's actually niche to your business as an MSB. It might make you stand out when the technology is ready to go. It might make you stand out from everyone else that has a cookie cutter solution.
Cool. Shifting gears a little bit, we had some draft amendments to the Proceeds of Crime, Money Laundering, Terrorist Financing regulations this year. Those were published in June, and in those amendments, we had dealers in virtual currency that would be considered money service businesses. What are your thoughts on the draft, and what do you think the impact is going to be on the industry?
I think anyone touching cryptocurrency should consider themselves a dealer, even if it's not explicitly set out. I think the draft was very vague in its wording and definitions. I also believe that, and I know there might be people from FinTrack here, I don't think they understand how large a volume of reports they may get by including everyone as a dealer in cryptocurrency. So we really need to kind of segregate who's going to be included and really what the focus is. Are we really focusing on money laundering? Are we focusing on reporting to show that we're kind of interested in money laundering? I really think we need to really focus on what we need and what we need these companies to provide us, and how's that going to help money laundering and terrorist financing, us combating money laundering and terrorist financing in the future.
Do you have any thoughts? No comment? That's fair. And I agree with you, Stephen. When I looked at the draft, one of the things that I felt was that there were some exclusions, but it was really hard to tell without explicit guidance. And I think some of that is going to come in the next round from finance, and some of that will come in guidance notes from FinTrack later on to say what was intended to be excluded. I know that I've heard from a lot of merchants that they're nervous about the idea that if they're accepting Bitcoin in payment, so for me as a consultant, I accept payment in Bitcoin, does that mean that I would in some way be considered a dealer? I think the answer to that is no, by the way, unless you were a regulated entity to begin with. So if you're selling gold, you were already regulated. If you're a money service business, you were already regulated. And so accepting Bitcoin doesn't really change that, other than to add certain additional reports. But I know that there are a number of business people that are feeling pretty nervous about it, so I hope that we see some of those exclusions and guidance.
I think they should be nervous. To be quite honest, I think you should be nervous. You should be always thinking about putting yourself out of business first before someone else does. So getting your mind geared to what you would need to do to prepare if those regulations were going to include you as a dealer is probably a good state of mind to be in right now before next June and before FATF starts releasing some of their guidelines.
Fair. In terms of traditional money service businesses and dealers in virtual currency and Bitcoin businesses, what do you think that we can learn from each other, and where are those opportunities for collaboration?
So, I guess we've talked about this a bit. The biggest thing about the cryptocurrency world is one, people have complete control of their money. And the second one is that it's very streamlined. So if I'm sitting here right now and I want to send money to Sudan, I can. I don't have to go to my bank. I don't have to get a SWIFT code. The bank doesn't have to send it to a clearinghouse. You know, if it's above 10,000 or whatever that number was, it doesn't have to, they don't have to look into where is this money going, what's happening. It's not going to take me a week. And as a very honest example, a company I was working for last year was based in Barbados, and they actually were paying me my salary from Barbados, from RBC, a Canadian bank, to a Canadian bank, and they lost one payment. And so RBC in Barbados said, we sent it. My bank here was like, we didn't get it. And then it took 3 weeks for them to figure, obviously it was the clearinghouse in the middle, which happened to be HSBC, and literally it was me and my finance guy sitting there going, what is going on? And I was like, you know what, just pay me in Ethereum next time, this is easier. So it's those transactions and the way and the mindset of people that's changing that we need to be aware of and learn about how do we streamline this a bit more? How do we make it easier? And quite honestly, no one cares about the technology, and no one should. No one needs to really know it's on a blockchain. All people care about is the user experience and is it easy? Did I get my money on time? Great, that's it.
I think on a payments perspective, not only is transparency more interesting for cryptocurrencies, every time a payment is sent, it's on a blockchain, anyone can see it, you know when you got paid. But what's particularly